If you 10x Bitcoin now, it'd be worth 30 trillion, which is like half of the dollars in circulation. Yeah. Or, it's a massive amount. So to 10x a $3 trillion asset is very, very difficult. To 10x a $300 billion asset, that's doable. I would say that there's, for every one chance of it going to 150, there's three chances of it going to 60. Yeah, it's all a probability. Look, somebody presses the wrong button and boom, something bad happens. Up it will go. You can't predict the unpredictable, but if nothing changes, if everything carries on going as it's going, it's going to go. Whoop. Should have gone 6 months ago, but it didn't because of all the troubles in the market. But I think why would you short Bitcoin? That would be stupid, right? But why would you be long Bitcoin? That would be pretty dumb too, right? There's all these other things you could have.
Bitcoin's hype has peaked, while gold and other metals may hold the real upside. A seasoned market analyst, Clem Chambers reflects on his experience with Bitcoin over the past year, noting that after buying at $20,000 and seeing it reach $100,000, he feels no incentive to continue holding or increasing exposure. While he acknowledges the upside potential, he emphasizes the risks and limitations, especially given the scale of Bitcoin relative to the global financial system. Clem contrasts this with gold, which he sees as having significant upside potential, particularly given geopolitical tensions, such as the conflict between China and the US, and the potential for disruptions like a Taiwan embargo. He also highlights practical challenges with cryptocurrencies. Clem points out that holding crypto securely is complex, with threats from hacks, unreliable exchanges, and the need for cold wallets. Beyond security, he critiques the transformation of Bitcoin from an anti-system, non-correlated asset into one now heavily influenced by institutions and Wall Street. For him, this institutionalization reduces its appeal as a truly independent financial instrument and makes it less desirable compared to other investments. Ultimately, Clem frames the discussion around probabilities and opportunity cost. While Bitcoin could rise further, the odds seem skewed toward lower performance, and he stresses that other assets like platinum, palladium, or industrial metals may offer better returns and lower risk. For Clem, investing is about rational assessment, not following hype, and he underscores that assets should be evaluated on their potential rather than treated as a belief system or speculative religion. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Anyway,
you,
you know what?
You've heavily invested.
I came on this show a year ago and I said 100,000, I'm out. It's 20,000 upside. There's, 50, 60,000 downside. I don't want to be sat around, scratching various parts of my anatomy waiting for something big to happen because it's, I bought a 20,000, it's 100,000, 5x. Thank you very much. Goodbye. Thank you for the fish. And here we are a year later at 100,000. And that was kind of what I was feeling, although I would have thought it would have come down well before it's now. So on the long side, I no, absolutely no. And for the last year, no, 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 no. And I've taken a lot of jip from people saying, "Oh, enjoy being poor and all that." Well, that was a long time ago when I enjoyed being poor, but I don't see the upside in Bitcoin. I don't see the upside in crypto, not this cycle. Okay. Gold, on the other hand, has repriced and it's hit a level which is either the whole way or half the way. So if it goes up from here, if it breaks out, it will go another couple of $1,000 or at least to 5,000. And if what I expect could happen, I'm not saying it's going to happen, it could go to 8. So, that is the upside I look at with gold. So I'm sat here, like most gold people are, going, have you seen it? Is this it? Is it over? Do I need to sell now? Oh, no. Oh, no. And of course, it's doing what happens when it reprices. It's going sideways. It's doing that. So the question is it going to go or is it going to go? It's not a bad way to go. And if I suddenly thought, well, actually, what am I doing? What am I sat here for? I would flip into platinum or palladium because they've got really big upside. But gold is for war. And this conflict between China and America is not going to go away. You saw Trump go over and try to bully China into, concessions. And what did he get? Very little, right? So they are now, China and America is literally toe to toe, head to head. Well, 2027 is when they've indicated that they're going to go and invade Taiwan. And that's your homeland, isn't it, David? And,
Sure.
that is a big deal. Well, what would gold be if there was an embargo by China of Taiwan? You tell me that.
I'm
8,000? If you 10x Bitcoin now, it'd be worth 30 trillion, which is like half of the dollars in circulation. Yeah. Or, it's a massive amount. So to 10x a $3 trillion asset is very, very difficult. To 10x a $300 billion asset, that's doable. To 10x a 30 billion asset, that's not so difficult at all. To 10x a $300 million asset, which it was not that long ago, pretty easy, right? But what actually is, there's two things that put me off. Crypto is very insecure. Yeah. If you click on the wrong link on the interwebs, your crypto's gone. Oh, you need a cold wallet. No such thing. You put it with an exchange online, not your keys, not your crypto. I've got $100 million of Bitcoin in FTX. No, you haven't. So it's very hard to hold it and keep it because there's all these hacks going on all the time. Every week you'll hear about hacks going on. That's rule one. That's the thing that's really kind of put me off. But the second thing is Bitcoin, crypto is meant to be the anti-money. It's meant to be bringing down the dollar. It's meant to be the future of finance. It's meant to be outside the system. It's meant to be non-correlated. It's no longer any of those things. It's actually part of the financial system now. It is controlled by the institutions, by Wall Street. And I don't know about you, but anything Wall Street wants to sell me, I don't want to buy. Yeah. Anything that Wall Street does, it's not for my benefit, it's for their benefit. So when the institutions and Wall Street say, this is excellent, we're going big time for it, I want to run away. I would say that there's for every one chance of it going to 150, there's three chances of it going to 60. Yeah, it's all a probability. Look, somebody presses the wrong button and boom, something bad happens. Up it will go. You can't predict the unpredictable, but if nothing changes, if everything carries on going as it's going, it's going to go. Whoop. Should have gone 6 months ago, but it didn't because of all the troubles in the market. But I think why would you short Bitcoin? That would be stupid, right? But why would you be long Bitcoin? That would be pretty dumb too, right? There's all these other things you could have. You could be in long aluminium. You could have bought platinum at 900 when I said on your show, and now it's 1400. Yeah, but there's another bus. There's another bus coming.
what's
It's an asset. It's not a
which
religion.
Clem Chambers explains that leverage is a hidden trap in financial markets designed to funnel investors' money into the pockets of institutions. He warns that the more leverage you take on, the faster volatility can wipe out your account. This, he says, is the oldest trick in the book. Brokers and institutions entice traders with high leverage only to use market movements to trigger stop losses, transferring money from your account to theirs. Volatility combined with leverage is a surefire way to lose your investment, and anyone offering too much leverage should be treated with extreme caution. Clem Chambers also emphasizes that governments remain determined to maintain control over money and authority. He explains that stablecoins and other forms of private sector money clash with public institutions, which operate with monopolies on violence and currency. Historical attempts at private money repeatedly face pushback because governments cannot risk losing control over their monetary systems. According to Clem, central banks like the Bank of England will always prioritize regulating the money supply and preventing programmable or decentralized currencies from undermining their authority, keeping the balance firmly tilted toward preserving traditional power structures. Let's get back to the interview.
Yeah.
Yeah, look, the golden rule is in markets is that leverage kills. Okay. And leverage is the way that institutions pump your money into their pockets. Yeah. They give you enough and then they blow your stops and they shut your positions and their money went from your account to their account. And all that happened was a number changed on the screen. Yeah. It's a trap. Leverage is a trap. Would you like some leverage with that? Oh, I could give you 200. That's the way that the scammers drive your money in your account into their pockets. Since the day, Since the beginning of time, right? It's the oldest trick in the book, and people fall for it over and over again. Yeah. The more leverage you have, the quicker you're going to go bust, the quicker you're going to lose your shirt because volatility coupled with leverage kills. And of course, everyone goes, "Oh yeah, oh look, I made some. Oh, I'm gone." Right? It's the oldest trick in the book. Leverage kills. Anybody offering a lot of leverage is a scammer. They're offering it to you, so the money in your account goes into their account, right? And goodbye. Oh, your stop loss. Would you like a stop loss with that? Would you like some leverage with that? Oh, look, the
Yeah.
volatility knocked you out. Your money's
Let's
gone now. It's gone from your account into
let,
mine. I don't know. They would sound pretty ridiculous to say anything else, but I got to tell you, the British Treasury, who are really the people that run the country, you might think the politicians do it, or you might think the mandarins, but it's the Treasury that runs Britain. They absolutely hate stable coins. They hate crypto with a vengeance. And they might say one thing, but they'll be doing another. You can be sure of that.
Why do they hate stable coins? I mean, wouldn't they issue their own?
Private sector money, come on, figure it out.
Okay, but
Private sector money is private sector money. Come on. I'm in the public sector. I've got two monopolies, violence and money. I'm not going to let either of them go, am I? Ever.
wait, I'm sorry, I'm not quite understanding what you're saying. That the private sector money is not managed
Crypto
by
is
the
private
treasury,
sector money,
right?
right?
Okay,
Public sector is public sector. They run the show.
sure.
And they've got
Yeah.
two monopolies, violence and money. So they're not
Yes.
going to give up any of them, are they?
Yeah, I understand.
That's how they
Okay.
run everything. Violence and money. If you don't pay the
Oh,
money, they take your stuff away, right? So that's their two monopolies. That's how they actually make everything work. That's what they need to do what they do, right? So they're not going to give up they're not going to have private sector policing and private sector violence, and they're not going to have private sector money if they can avoid it. And they've been trying to
I see what
avoid
you
it for
mean.
long enough, and they will continue to try to avoid it. And they will probably succeed.
And
Well,
you can
not if
make
you
an
don't own the ledger. Not if the ledger belongs to some bloke that's not in your country, that's not in your jurisdiction, that maybe wants to buy a football club, and rather than talk to you, who just says, no, 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 no. Yeah. What have you got then? You got nothing, have you? And you can't do your own one because they can't do programmable money and have the North Koreans destroy the whole economy, right? So private sector money is private sector. There's been private sector monies before, but throughout history, and every time it gets too spicy and too interesting, the governments come in and say, "We'll do that." But they can't do that with crypto because they can't risk the problem of having a programmable money that somebody can come along and mess with. And so they can't have programmable money, so they can't have crypto. But they can't let their money supply go. That's what they do. That's what the Bank of England does. It controls the money supply. You can't have this rando private sector money sloshing about. Oh,
To
yeah.
some
Oh, they want
seller.
to use you as exit liquidity. But, at the end of the day, who's the customer here? The customer here is not the punter. For the last 20 years, the punter has been pulled left and right and up and down by Wall Street. And that's what Wall Street does. It takes your money and it buys big houses in the Hamptons. That's what they do. They don't give it back to the market. They buy yachts with it, right? That's what Wall Street does. So yeah, if they want to sell it to you, you don't want to buy it. So yeah, that is bearish, but the customer is not the punter. It's the governments, and that's why they had to get out of the way. You cannot manipulate a market when the government is buying. You have to just step aside and let them run the price, and they're running the price, and the
Clem,
price is run. Look, my people I'm aware of in government that I know, they think the war has begun already. They think World War III is underway, right? They believe that it's not going to start. It started, but they believe it's a Cold War, yeah, and they believe that World War III, the Cold War, has begun. And if you look at what the American government did in January, they came over to Europe and they said, "Putin, your problem. We've got problems in Asia. Sort that one out." You can go listen to the speech made by your Secretary of, was it Defense once upon a time? Oh, yeah, the Secretary of Oh, he's now the Secretary of War, isn't he? Oh,
yeah.
what happened there then? Why did they change the label on the tin?
Bitcoin and other cryptocurrencies highlight the ongoing tension between financial innovation and institutional control. While they were originally designed to operate independently of traditional systems, offering decentralization and non-correlation, practical risks such as hacks, insecure storage, and the lure of high leverage make them precarious for investors. At the same time, governments and central banks maintain tight control over monetary policy, actively resisting private or programmable forms of money that could undermine their authority. This institutional oversight, combined with the growing involvement of Wall Street and large financial players, limits Bitcoin's ability to fully fulfill its original promise. As a result, investors must navigate carefully, balancing the potential upside against security, volatility, and the broader structural forces shaping the crypto market. Understanding these constraints is essential to approaching Bitcoin not as a speculative religion but as a complex financial asset with both opportunities and inherent risks. How do regulatory oversight and institutional involvement impact Bitcoin's potential as a truly decentralized asset? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support and we hope you enjoy the video.